So that's sort of suggesting there could be a bit more to come. Back over into Stonks. Consumer staples still going pretty well. Again, it's just shifting into defensives, the market shifting out of consumer discretionary and the higher risk stocks. XLK, technology still getting punished a bit. Utilities got punished a bit too, which is interesting, but it has been on a pretty decent run over the last month or so, I believe. Yeah, been on a pretty decent run. Again, pretty well everything will get punished if there's a big market crash, which I'm not seeing any specific cause for that come out yet. So at this stage, we probably look at this as more of a mean reversion play rather than like a proper market crash. But when we do bounce from these, wherever the low ends up being, you'd be hard pressed to suggest that it's going to actually result in a new all-time high, unless it's just something gets pumped into the system and there's a massive blow off top. So just coming into regular stocks for the time being, decent bounce off the 50 EMA there for NASDAQ, or the Qs at least. I still expect, what are we? That's Tuesday US time. So I suspect probably Wednesday, Thursday will find us retesting this trend line, potentially. Momentum is still to the downside, so got to be cognizant of that, but not a bad horizontal level here. It's hit that 1, 2, 3, 4, 5 times. So not a bad level for a little bounce. I suspect at this stage we're probably going to find some resistance at that level. So should be getting close to a relief bounce on Bitcoin as well. Same sort of thing on minis, same sort of thing on the US 100. Equal weight hasn't actually reached its 50 EMA yet, and it has come into this vector candle a bit, but a little surprised it didn't take more of that. This one's interesting though, because we got a horizontal level here, somewhere around there. It's probably going to provide some resistance. So if we do bounce up, test that, and come back down, then that's actually going to be a bit of a head and shoulders pattern as well. But got to keep in mind that there is some vectors above that, like, it could actually break above this resistance up into this area here before pulling back. We could actually go up and retest this level again, but they're the sort of key levels you need to keep in mind. Momentum is still to the downside, and BBWP is ticking above there, so I guess caution is needed here because it could end up being something like this as well. Back in July, August last year, that was about 11% correction. As I said, I'm still expecting something between 10 to 15%. 10% gets you down to this level, basically. Sweep the lows. That. SPX, good bounce off this trend line. So again, that could lead to a couple of days of upside. Again, Wednesday, Thursday have been pretty positive days this year. So not a bad bounce hit the 50 EMA, rejected this trend line so far. So yeah, that's a good sign. GDP growth, that's an interesting number. That's quite a bit lower than previous. Yeah, durable goods orders will be interesting. If that's another negative read, that could send markets into a bit of panic. Forecast GDP growth, if that comes in quite a bit down as well, that could throw a spanner in the works of any sort of bounce. 1st of March, so this is into next week, isn't it? Yeah, okay. So next week will be interesting too. Personal spending is expected to be down. Core PCE is expected to be up. Personal income is expected to be down. It's not looking great. Interesting video to watch is Bravos Research one put out today. Just looks at housing market and how it tends to precede economic downturns like recessions, and we've had a pretty decent dip in housing activity in the US. But the typical unemployment rate that happens around the bottom of that hasn't actually happened yet. So, and there's a few other reasons for that. And this is why, like, there's so many differences in this particular run compared to previous sort of topping signals and market crashes and stuff like that, which are making me think that it's going to be a pretty decent crash when it happens. I'm not necessarily saying this particular point is the start of something where we just flush 50% down. I'm not seeing that yet. I think it could be later in this year, maybe even I'm going to put it out potentially even start of 2026. But certainly, like, this drop in Bitcoin has happened a bit sooner than I thought. I was sort of mid-March thinking, a couple of weeks out. But yeah, that's the way trading goes. You've got to be ready for these things and keep the different scenarios in mind. This trend line here, I just want to see. That is just bad drawing. And that's probably a better trend line there. Didn't actually close below it there. So, no, we may hold that. There's going to be a fair bit of resistance overhead. Actually, for this to really sort of have another decent run in it, I'd actually like to see this come down a bit further. I'd like to see it come down into the 200, and then bounce, put in a lower high, and then that would probably be the start of something bigger. But for the time being, momentum's actually the downside. You could get a couple of green days in here, just small ones, and momentum will still stay to the downside while BBWP will still stay elevated. So just be careful of that. They like squeezing shorts that come in. Similar thing here for minis. Equal weight S&P 500 actually hasn't really been dropping as much as the rest of it. So we've still got a bit of rotation through the individual stocks. Interesting that it's coiling up here too. Kind of a nothing read for me at the moment, but if we actually break back above here, 180, then the market could go on a bigger bounce. This could be a fake out to the downside. And again, there's nothing really that I'm seeing, apart from some speculation around interest rates and stuff and what's going to happen there and the uncertainty in the market, that's really causing this. There's no major, oh shit, someone did something bad and it's screwed up. So just keep that in mind. We haven't had the trigger yet. We've got a whole heap of signals saying the economy's screwed and stuff like that, but the market will tend to react before that. So this is potentially the first warning shot. You typically get more upside after that first warning shot. Interestingly, IWM has broken below this, and that's the second close below. That's not a good sign. This is its last resort. I think there is a decent support level through here, which I think I mentioned that yesterday. That should be support, but you know, if we see rejection off this level again, then you'd expect a fairly big drop after that. One thing that could play out here, though, is if we do have another couple of green days, we could actually come back in here and recover some of this vector candle, potentially up to the 50 EMA there. So even actually that level there, so 222. Aussies that are into cricket will like that number, but yeah, that's probably a pretty good level for a bounce on IWM. If we get rejection off that level, and I'm actually that level, if we get rejection from that, then I'd be a little bit more concerned. That was an old vector thing. Okay. XLI still in the channel. Good bounce off that channel actually, wick down to it. So again, good setup for a little bounce, probably into the top of this channel, which would recover most of that vector. XLY, XLP still going. So this dropping as hard as it is, it's actually suggesting that this is a fairly major correction starting. Like that was November 2021. We had similar high, and this has actually started off probably worse than this one. Bigger drop to start with, kind of. Look bigger, but maybe not. We have fallen through this level here. That's, I don't know how important the levels are here, but there is another point of interest there. So potentially get some support there. A little bit of a relief rally, similar to what happened here. And then I'd be looking for, to see what happens here. Sorry, just got to spray a mozzie. Right, so that's actually a pretty strong level there. That was the first level it got to on the bounce in January 2022. And there's a little level here as well. So somewhere around that, that's what I'm looking for. If we do that, and that's a vector candle recovery there, won't close the gap, but vector candle recovery nonetheless. Bounce back up, recover this vector. And then if we get rejection around there somewhere, maybe a little bit higher, that's going to be suggesting we're going into a pretty decent correction. So as you can see here, this turned around December 2022, started to turn around at least. Just after the market bottomed. It was actually the second, it was the lower high in the market. Sorry, higher low in the market after the bottom was the bottom in this. So it's just something to keep in mind. You're looking for levels around here for the bottom of this bounce, I think. But it's going to be choppy. We're going to have rallies. We're going to have buy the dippers come in, and we're going to have plenty of sell the rippers, I'd say. So just, we are hitting levels that align with other times that have been quite nasty for markets. So XLP versus SPY. Wow. Okay. So again, just hitting this trend line here, a rejection from that would align with a little bounce in markets at the moment. A break and a confirmation to the upside of this, then I'd actually be suggesting that this is the start of something major. Because that every time we break a major trend line like that to the upside, the shit hits the fan. That was December 2021. That was a break of that trend, really. Got back above the 50 EMA there. We are back above the 50 EMA now. So pull back into that and then bounce away. It's going to look pretty nasty. Same thing here. Sort of broke above just there, which is just October 18. Interestingly, I mean, that was COVID, so we were going into something similar previously, but yeah, pretty well around Feb 2020, same sort of thing. Broke that level to the upside. The other big one, we'll see if we've got 2028. Yeah. Sorry, 2008. This one wasn't as, I guess, aggressive of a trend line, but, breaking key levels to the upside. And yeah, that was pretty close to the top. So this chart here is suggesting that something big's coming, and it's actually started. Got to keep that in mind. Equal weight, XLY, XLP, coming down pretty hard now. Might get a bit of a bounce here, similar to everything else at the moment. It's hitting a decent level for a bounce, but I do suspect that will finish. So equal weight, XLY versus XLP versus SPY. Sorry, always get that wrong. Again, it's potentially got another couple of days to really break the bigger trend line. But at the same time, it depends where you draw these trend lines. It's more, have we got a reversal of trend? Can we confirm above the 50 EMA? It seems to be the key level of this. Like if we're breaking above the 50 EMA, retesting and moving away from that, look out below. That's, I guess, the real message here. So yeah, that's pretty typical for an issue starting to occur. Same sort of thing here. All right. Yeah, that's and we're coming off levels that we have not hit before in terms of how low this is. So it just shows you how bullish the market was and how much risk was in the market. A lot of leverage in the market too. That's all got to unwind. So consumer staples going on a decent run. Interestingly, this would be a really good W pattern if we did have a relief rally in the rest of the market and consumer staples actually pulled back, come into this level here, find some support, good level for support. It's got another touch on it over here. It's got the middle of the W. Bam, 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 bam. Move away. That would be very interesting. Now, does it happen though? Because staples will pull back as well, just not necessarily as much as everything else. So, got to be like, it's not just pile into the staples ETF and you'll be fine, you'll go up. That's not what I'm suggesting there. But certainly, as the market comes down, that might be a reasonable play. See, it still drops when the market drops. That's, I guess, the point here. It kind of went sideways through this drop in the market. I mean, it did come down, but it recovered pretty quickly as well. So just know that money moves into staples when the market or the big guys are defensive. Same sort of thing here, September 15. As you can see here, like, and the market's coming down, and I'm referring to this pink line here, that's the S&P 500. The market comes down, staples will come down, just not necessarily as much as the actual market itself. 37% versus, don't know that that's the right scale there. It didn't come down 90%, but I can't remember what the GFC total crash was. Anyway, it wasn't 80%. So yeah, you can see staples actually goes pretty good from the bottom of those crashes though. It did from the GFC anyway. So yeah, things could get weird. Consumer discretionary, topping signs there. ARE, so regional banking, kind of confirming below the 50 EMA at the moment. Hasn't rallied as much as I would like to see yet. So might get a bit of a bounce on that, but again, that's a bit of an M pattern there as well. Interesting bounce on home construction. Said yesterday that was a key level for it to hold, and we have had a bounce. I want to see what happens around this trend line here. Couple of days up. Yeah, that's interesting. Same sort of thing. And home builders bounced as well, but kind of a weird level. There is some support from that level, but don't necessarily think that's done yet. Semis pulled back pretty hard the last couple of days. Again, another bounce up, recover some of these vectors, and then a move to the downside would make some sense here. There's a bit of a level through here. That was sort of the main part of that channel for ages, so would make sense to have a bit of a relief rally here, but I suspect it's going to be smaller candles, so don't expect us to have any massive gaps up. Just be a little rally, couple of days most likely, in my opinion, and then pull back, and then that's definitely a target there at 200. DJI Gold, again, nice little bounce, but if it can't sort of close above, where's my line? If it can't close above that level, somewhere around there, then it'll pull back harder, and that will not look great for markets either. Just doesn't really matter what the level is with this. It's just breaking previous key levels at the same time the market starts to pull back. That's not a good sign for market. Just given everything else we got, all the other signals, then overall the next couple of years are looking pretty nasty. A bit of a bounce on DJT. Not much that. Oh geez, this looks so dicey. How would you screw the most people in the market? Make them think this is going to keep going and then pull back up into this level here. Probably that level there. Somewhere around that. VIX. So VIX is just eking its way up. And we could come back down into this trend line and then spring away. And again, it's market's just not going to let all the bears think, oh, this is it. We're just going to go massive short. It's going to fuck them over. So just remember that. But in general, the bias should be down and just relief rallies expected. Interesting close yesterday. Again, the skew's still pointing to downside, but today's read could tell us what is going to happen in the next couple of days. Just confirm if that bounce is expected, because this does bounce back up, then it's pretty well likely that you're going to get a couple of days of bounce. This one, so the 1 day volatility, it's actually suggesting a little bit of upside. So that would have been down to start with, but we've actually had a little bit of a rally, I think, from memory. Oh no, still coming down. No, okay. Interesting one. So interesting level for a rejection off that too. Yeah, that's not what I thought it was going to suggest. I actually thought this was going to be coming down, but the fact that it's going up kind of supports the couple of days of bounce. Interesting. I want to have a look at the advanced decline line too. That was actually something I forgot to show you yesterday. Advanced decline line. So broke through both of these moving averages. We haven't had a cross of the moving average yet, and this little bounce on advanced decline line today, that is in support of we may actually be finding a little bottom here, temporary bottom. I'd expect a lower high on this and then to move back down. Once we get that cross of the moving averages, it could get pretty nasty. Come back. Let's have a look at the December 2021 was where we had the last major sort of reset. As you can see, it had a little spike above, and then we just put in a lower high, and it just kept to the downside. So little spike above. If we come back down and then put in a lower high on this, then yeah, there's more downside to come. Let's see, does this go back? Should go back to 2008. Yeah. Again, this one came down a bit harder at the start, 07. And things like these kind of can give you some reasonable edge on the market a few days ahead of what happens. In this case here, it started to drop July 07, which was pretty well the top of the markets from memory. Yeah, July 07. So something similar looks like it's potentially happening. Let's go. Where was I? Here. So DAX. DAX is probably topped as well, but and a little bit of a rally into. Still hasn't really managed to get much past that wick. So again, DAX may recover a bit more of this just to get rid of the shorters, but look at that. Bit of a retest of that breakout level there. So the Chinese market, the Hang Seng, CN50. CN50 is flat though. So, I mean, most money is going to pump into the Hang Seng rather than CN50, but interesting. Just whether that can survive a global market reset. UK 100 recovered that vector, hasn't closed above those moving averages yet. I mean, it's still an hour and a half to go, but closure below them wouldn't necessarily make me bullish. Well, it wouldn't make me bullish. I'm expecting it to come back into here, but again, if we get another couple of days up, you could see it retest this little trend break. It's only a very small trend. I wouldn't necessarily expect it to, but yeah, just when there's a lot of things that could happen in that direction, it just increases the chances that we are actually going to get a little rally. Japanese market, again, yeah, broke that 200 EMA on the daily. Retested it twice now and rejected off it with strong volume. That's pretty nasty looking. Yeah, I think that's coming down a bit more, but the time being, it's finding support at this level as well. You know, there was a lot of support around in this area. So again, another bit of a relief rally, a couple of green days, make everyone think that's it, and then rip it further down. So beware if there is some sort of news, some sort of global market shitting the bed type news comes out. Just remember, if it's in the news, it's in the price. So that would just be confirmation that this thing's going to keep going and going to be nastier. So we've already seen the market show its hand. It's just a matter of how it plays out. This will be an interesting level for bonds. Bonds are seeing a bit of a flight to safety, even though oh no, yields are dropping pretty hard, so that's good. And yields could find a little bit of a bounce here. The fact that yields are dropping and the stock market's dropping at the same time is probably not a great sign either. High yield junk. High yield junk. What the? Interesting. Typically, this is a risk off thing. These guys would normally be selling off. Yeah, you're normally seeing high yield junk go south at the top. That's weird. Unexpected, but again, it could just be a suggestion that the market will go up a little bit more. That's a weird one for me. That shouldn't be happening. Whereas this is probably a better indicator. LQDI, yeah. It may again get a little bounce. There is a bit of a trend line in this region, so a couple of days up and then breaking to the downside would suggest further market side. 2-year versus 10-year and the 3-month versus 10-year actually heading back up towards uninversion. I don't think it's going to happen on the 2-year versus 10-year though. Yeah, a bit of a key level here. Last sort of chance for some support on 2-year yields. And that's, I think, just a factor of, it's not necessarily what people think that the Fed's going to do now. It's just moving to safety. They'll take what they can get on in terms of yields. Should probably get another little bounce on both the 2-year and the 10-year though. Chinese yields are still moving up. Yeah. Interesting that Chinese yield moving up. US is moving down. Trying to remember what I had these. They've completely changed on where I drew them. That's rubbish. I know what this was for. This was showing a channel that suggests we're way overheated on the market. So the S&P 500 inflation adjusted is very, very high in comparison to previous cycles. And typically there is, I'll have to go back and redo this. It looks like we're going to start to pull back, but there are some key levels that you can get out of this that'll potentially find bounce points and bottoms. I need to redo that though. That is. All right. Copper. Dr. Copper is saying we're still a bit sick. Again, good level here for copper to find a bottom at. But again, it could just be a temporary bounce. Gold's finally pulling back a little bit harder. Look for a bit of bounce around here, but I still think that green box is where it's at. That's where I'll start to get interested in it again. Silver versus gold, sorry, is struggling. So glad I pulled out of silver. It's just, yeah, broken that trend line. I don't know why that gigantic box is there. Yeah, look, that's a fairly good break of that trend. It should come back all the way down into here, just looking at momentum and BWP reset. Yeah, might be some opportunities in silver soon, but I don't think I'm going to trade it. It can struggle differently. It's not as predictable as you can see as gold. It's choppy AF. Might leave silver. It'll probably run hard now that I've said that, but just not enough. Too much risk for a super account there. Oil coming down, as we said, tested the value area low. Yeah, interesting to see if it finds some support there, but if the market keeps going down, I'd expect it to get back down to the 66, potentially lower. Dixie's pulling back a little bit more as well. Again, just little sideways pullbacks into key moving averages there. And in fact, Dixie's pulling back and markets are pulling back is again not a great sign for markets. Japanese yen is going okay. The dollar probably sucks still. Yeah. Rejection off that 50 EMA there. And momentum's not looking great for it. So Aussie dollar back into 61 again is pretty likely here. A vector candle recovery. Euro's looking okay. It's finding a bit of resistance against that 50 EMA there. British pound is going okay, but I expect this to be a bit of resistance. So global liquidity, it's still kind of grinding its way to the upside, but it's at the moment, it's obviously not enough to support the market. Mag 7 hit that trend line and bounced off it. So interesting level there. Aligned pretty well with this level. So lots of trading going on around there. Could see a little bounce. It's like everything else. Not a bad level for a bounce. The breadth of this correction is pretty big. So still getting percentage of stocks above 50-day moving average dropping. So means most stocks are coming down at once. Tesla, that's interesting. So yeah, 250 on Tesla is a target. What is that top to bottom? It seems nearly 50%. Yeah, right. And there's probably still more to come, to be honest. If we're hitting those levels, I'd expect that to be a bit of a bounce on different stocks. Like some will start to recover before others. So Tesla should find some support at 250. But again, it'll probably just be a bounce up into into back to candle recoveries. Nvidia's struggling. That's interesting. Nvidia struggling into earnings. So earnings tomorrow. Well, this is a hard one to read. Market does like to move in one direction into earnings and then shift the other way. So same sort of thing here. It actually moved up. It actually moved up in the after hours in the pre-market a little bit afterwards and then just pulled back hard. So I actually kind of suspect something similar will happen there. Nvidia might be pretty flat around this level. It's value area high level as well, from a pretty big range. Yeah, I think Nvidia up into this trend line here wouldn't surprise me, but then I think it's probably going to find resistance there. Tricky one. It could even pull back into the point of control and then we get a bounce over a couple of days at the same time the market bounces. This is a coin flip at the moment for me, but vector candles above is a sign that at some stage I would expect it to come up into there. Again, with the rest of the market at key levels looking like the bounce is on the cards, that's probably the way I would expect it to go. Google's filled the gap. So again, a bounce from here, maybe a little bit down into the 200 EMA, but bounce from here into back up into this support level, which is now resistance. That's what I would suspect. Now, I do also think that Google at some stage will fill this gap. So got to be mindful of that. It can take a while. But yeah, I do expect it to fill that at some stage this year. Microsoft still coming. I think this is the level, somewhere in this box. Microsoft may still keep coming over the next couple of days rather than bounce. Interesting, BBWP's increased to with downward momentum, so could actually go a little bit lower than that box. Arcade still smashing to the downside. This is a good level for a bounce. It has been respected, the middle of this channel, quite a bit. So again, that's another good level for a couple of days of upside. Apple's actually at a point where if it does break through, then it's going to retest these highs potentially. And if the rest of the market is having a couple of days of up, I would expect Apple to keep going as well. 3M, little bounce into vector candle recovery. Amazon broke that level. Another down day. It's not the best level there for a rebound yet, so maybe another down day into this 200 EMA, which is a key support level as well. Like if you're going to draw it, somewhere in there would actually be a good level for Apple. Amazon, sorry. Meta, see, Meta's at a good level for a bounce as well. Vector candle recovery on the wick. Momentum's better than most too. Like that's a good spot for momentum to turn around. Could keep going a little lower just into this trend line here. That'll recover the rest of that vector. It's already recovered 50% of it, but yeah. Airbnb filled the gap. May come a little bit lower into here. But yeah, that's still think Airbnb is not a bad buy, but it'll get smashed if the rest of the economy gets smashed. It's just I like their business model. I like the fact that they're very profitable. Their fundamentals are actually pretty good. It's just whether people stop taking holidays altogether. This will be interesting on AMD. Key level again, could get a bounce. Failed this trend line, so this trend line's probably not as strong as what this one might be. Yeah. Anyway, expect a bit of a bounce, potentially up into that resistance level again. We'll put that right there now. Broadcom, again, bounces on the cards here. Vector candles, hit the 50 EMA, not a bad level. Momentum's quite low. It's in the bearish control zone, but could shift pretty quickly on the daily. SMCI, oh, that's broken back within pretty reasonable trend lines. Below support, that's not looking great. SMCI is actually looking pretty negative. ASML is still struggling as well. Potentially back in to fill this gap here. So the bounce may not happen on all stocks, but in general, as a market, most of it seems likely. Not a bad level here for TSM to bounce as well. Surprised they didn't get a bit more of a bounce on the news that Apple's gonna start manufacturing data center stuff with, I can't remember their supplier's name, but in the US, and they use TSM silicon. So Solana still can't break that level. Earnings tomorrow for the open. So that'll be still struggling. Aussie market, yeah, not looking great either. I still expect it to at least hit this level. Probably wick down into the 200 EMA there before a bit of a relief rally. So Ethereum, let's have a look at that. Ethereum couldn't hold. This will suit Bybit nicely. Bybit will be buying the dip here. Ethereum, yeah, Ethereum looks like it's going to want to come down and recover that a bit more. Decent bounce at the moment, though. I'll just have a quick look at this on the hourly. That's actually pretty positive. But again, it's at the moment, it's vector candle recovery. Could come up into this to 2600 again, but I would expect a bit of resistance there on Ethereum. CME, not a bad little basing pattern here on decent volume. Momentum is switched to the upside. Volatility is high, obviously. We do have a gap up around 93, 93.5, and a vector candle up around 95.6, and some more vectors above that. So once we do get a proper bounce confirmation, then there's some definite upside targets there. This has been the one though. So we actually, when we hit, this is the total crypto market cap versus stables. When we hit this and bounced off it on volume, I actually thought that that was going to be a really good spot for a decent bounce, like properly up into at least this level, potentially find a macro bottom. But it had other plans. It only took sort of 5 hours and it was back trending to the downside. We never recovered that 9 EMA either on the hourly, let alone the 13. So, and we still haven't. This candle here right now is the only one that we've had that actually looks close to closing above that 9 EMA. And I would suggest that is a good sign. This, looking at it on the daily, like that was a good level. But there is another level through here, which it seems to have respected so far. So if we, I'm just going to move this just to show you this level here. So obviously, fair bit of trading through here. Zoom out. Got a fair bit of rejection around there. Just going to move that up so it gets this wick. So looking at it, it's not a bad level for a bounce. Like we had a couple of wicks into it here. Resistance off it there, not for very long, but resistance off it. We wicked into it there. Lots of trading in that region. It is a pretty good level for a macro bottom, but just know that this trend line here is the bear market trend line. If we break below this trend line, that to me, BBWP is coming off on the 1 hour, and momentum is coming to the upside. So that, to me, typically suggests a relief rally, but momentum's been choppy AF on the 1 hour on the way down here. So just need to see a little bit more sign. You want to see a closure above that 9 EMA, really. At the moment, that's going to be your best sign that it's actually confirmation of relief. The other thing too, with sort of 85, there is not a lot of previous trades in there. It's just I know there's a fair chunk of liquidity sitting there down into that level. So now on Bybit, it didn't quite get into the 85s. On Binance, it did. So anyway, that it looks like this is the start of a relief rally. Again, this trend line here got respected on the 1 hour. And that was a trend line from the breakout, I believe. Actually, that might be from yeah, so that's from September breakout. It did respect that, so it'll probably respect that on the way up as well. What level's that going to be at? Probably similar to this trend line here. Actually going to move that down a little bit into there, just because that's where it broke and retested to. So I think that's a better trend line. So somewhere up in here for a bounce, maybe into the value area low at 94. If this is the bottom of this particular drop and we do go on a bigger rally, then obviously it should just grind its way up through all them and it'll pick up all the short liquidity that's in the charts, which there is a lot up around the 107 and stuff. So that's not a great rejection off the 9 EMA though on the hourly. Have to wait and see what happens in the next hour. All right, I've been talking for like an hour and 5 minutes, so potentially a little bit lower to pick up the bottom of this channel here. Like I'd kind of expect it to come into the 80s even. 81 hourly close, sort of above the bottom of this channel probably, which would be a retest of this big trend line here, the bear market trend line. Interestingly, on total crypto versus stables, we did actually close above the 13 EMA as well as the 9 EMA. That's potentially a better sign that we are actually going to get a relief rally. No confirmation on Bitcoin yet, and definitely one closure doesn't mean confirmation, but it's just interesting to note that. Litecoin hit 107. That was a pretty decent level for it as well. So not bad levels for most of these. Sol, I actually expect, it did hit a high volume area. It did bounce off that. So actually, is that created that high volume area just on this? Wow. There's actually a lot of volume coming through for Sol there. For it to create a spike on the volume chart that big compared to all the trading that's happened in this region here, that's pretty significant of a level. Again, I still think 120-ish is probably a better support target. And I've actually got a measured move on Sol over time would actually be something more around, if you look at this as a gigantic sort of double top, which it may be too long to look at it that way, that's granted, but if you look at that as a double top, okay, that depends where you measure it, doesn't it? So I measured it the other day and it actually got down into the 100 level. So at least 120. 120 is a good level for Sol, but the volume that's come through in this little bounce here is actually quite significant. It wouldn't surprise me if we got a relief rally, but at the same time, it's going to potentially find some resistance around the 162 level. So resistance there, could see it drop into that 120 before we actually get a decent bounce. Okay. XRP still hasn't actually hit the little trend line that we had here. And it's not a bad level for XRP, but again, I think relief rally is probably going to be met with a bit more selling. Sui, yeah, not bad levels for bounces on some of these, but Sui could find some resistance here too. It's just bounced up into this previous support level. Hyperliquid, same sort of deal. It's could have a bit of resistance here. Have a look at Bitcoin. It's a fair way off its resistance, really. There is a horizontal resistance level on Bitcoin around the 91.5, maybe a little bit higher. So that, to me, the top of this channel again is going to be the interesting point. If we can break through that and confirm above, then we should actually go on a decent run, but need to confirm on the hourly really too for proper confirmation there. All right. Bitcoin longs. Well, people are buying the dip quite a bit here, which is a good sign. But we did smash through this pivot as well, which surprised me a little bit. There is a vector candle somewhere in the past. Oh, yes, that's the bottom of that little pullback at the start. Again, 85 still on the cards here, but that level there, the 91, it did again find some support off the pivot level there. That's why I thought that was a really good level for a bounce, but a lot of confluence around that level. We managed to keep coming down. That's one of the lowest cyclic RSI readings I've seen too. So, and we've just put in bullish divergence on the cyclic RSI. So that's actually a positive sign. Relief rally into 91 is at least that level is possible, if not a little bit higher. 93 would actually be a pretty good level. Oh, sorry, 94, roughly. Just have to watch what happens at these levels, I think, before getting too excited. And so shorter time frames, same sort of thing. Back inside this channel, back closing above that mid band. This is a slightly different channel to the other 1 hour chart. Again, 91 seems like a pretty interesting level for this. Vector candles on the 15-minute up to that level. Most of the other ones have been pretty well recovered. It doesn't have to come up into there, but 94 is another good level. And you're probably going to have the 800 EMA or the 1 hour 200 EMA coming into that level by then as well. So good level for a bounce. Little W pattern formation here as well in the 15-minute. So hit the 50, pull back into the mid band of this, and then move away is quite likely at this stage. All right, that's the way I'm looking at it. It looks like we've potentially seen top in markets, but expect some relief rallies. Expect some weird shit to happen because the economy is not the same as previous market crashes. The housing market is struggling across the board, starting to struggle, and interest rates are at tricky levels. Bond markets are doing some weird things. Credit spreads are lowest they've been for a very long time, which typically leads to a big crash. But at the same time, employment rate hasn't increased as much as it normally would have at this stage. And things like AI and the fact that we've got an aging workforce, all that sort of stuff could make this a little bit different. So just keep all that in mind. But going to be a interesting couple of years, I can tell you that, and a choppy year this year.